Hey everyone, I'm Bradford with the Penny Pincher's Guide to Personal Finance. Did you know that the average American is spending $136 a month on car insurance? But that's just the average. If you're paying much more than that, then you're probably overpaying by hundreds, if not thousands of dollars each year. So let's break down 8 simple strategies that you can use to save on your auto insurance. Strategy 1 on this list is that you need to shop around for different insurance companies. Be honest with yourself. When was the last time you actually looked at your current coverage and compared it to different options out there? If you haven't, you've probably left a lot of money on the table, and now's the time to change that. There are a lot of different apps and websites that you can just import your current coverage from your current insurance company, and then it will instantly compare that across a wide variety of different insurers so you can figure out if you're actually getting the best deal. Now, if you don't feel like doing the research yourself, you can always just go to an insurance broker who's going to do that on your behalf. And their entire job is to take what sort of coverage you want, and then they're gonna go around to a bunch of different insurance companies and try to negotiate the best deal. Now, a word of caution on doing this is just because you're getting the cheapest insurance quote from a company doesn't mean it's actually gonna save you the most money. Make sure you're looking into different customer reviews for that specific company and understanding what the company does when it's time to actually pay out an insurance claim. If the company has a track record of making it nearly impossible to pay out anything, then you're better off looking elsewhere. And never underestimate your power as a potential customer. All the different insurance companies want you and your money, so they're willing to negotiate if you actually try to get you the best price, so that way you're gonna choose their company over a different insurer. Number 2 on this list is to just increase your current deductible, which is the amount that you're gonna have to cover before the insurance company is actually gonna kick in to pay anything above that amount. Now, increasing your deductible is one of the easiest ways to lower your premium without having to do any sort of research or basically do anything outside of your current company that you have. Now, the standard deductible that most people have is going to range anywhere from $250 on the lowest end all the way up to a couple $1,000s if they're deciding to self-insure. Now, the reason you're going to want to have to look into actually increasing your deductible anywhere from $500 to $1,000 up to whatever you decide is that because you're offering to cover more money up front, the insurance company is going to be able to give you a lower premium. Now, you might save a ton of money by doing this, but on the other hand, it might only make a small difference. So how do you decide whether it makes financial sense to increase your insurance deductible? Just do this simple test. Say you're going to increase your deductible from $500 up to $1,000. See how much money you're actually going to save with your premium over the course of that year. If you're going to save more money in 1 year with your premium being reduced than the amount that you're actually increasing your deductible by, then it is a good decision to increase your deductible. Now, if it's going to be less than that, it's probably better to just stick with your current deductible, because the thinking is that if you can cover that in a year, that's probably a pretty safe timeline where you can almost guarantee that you're not going to have an accident or theft or anything like that. Now, if the coverage time to be able to recoup that difference in your deductible is going to take much longer than a year, you're putting yourself at an increased risk that you're going to have to actually shell out more money in the event of an accident or theft than you're actually saving money by having that lower premium. But the caveat to all of this is that you have to have an emergency fund in place so you can actually afford to cover the difference of the increased deductible that you're putting in place. Number 3 is to stop paying for the insurance that you don't need. If you're driving around with a vehicle that doesn't have a very high value, say it's a couple $1,000s, you'd normally consider a clunker or a beater car, then you probably don't need to have collision or comprehensive insurance, which is insurance that's going to go towards replacing the value of your vehicle. Now, you can probably save a pretty good amount in your premiums by removing that coverage and just deciding to self-insure instead. Going back to the point that you need an emergency fund in place, but even if you don't have a very large one, you can probably just take the difference in the premium that you're saving and start putting that money towards a car replacement or car repair fund. Strategy 4 is consider how your vehicle looks to the insurance company. How much does your car currently cost? What type of vehicle is it? The more expensive a vehicle and the more sportier a vehicle is going to mean that that vehicle costs more to insure for the company. The more expensive it costs, is pretty simple. If you have a $100,000 car, it costs a lot more to replace than if you have a $20,000 car, and the insurance company is going to charge you for it. At the same time, if you're just driving around in a minivan, you're probably not as much of a risk to be zipping around, speeding through red lights, and at a high risk of an accident than if you're driving around in a brand new Corvette. So with this in mind, you might need to consider downsizing your super expensive sports car that you currently have to something that is less expensive and more boring. And the same rule applies that when it comes time to actually buy a vehicle. Take a moment to consider how the vehicle is going to look to your insurance company if saving as much money on your premium as possible is important to you. Number 5 is consider what sort of safety and security features your vehicle comes with. If you can make sure that your company knows that you have side airbags, that you have emergency braking, that you have an anti-theft device in your vehicle, all of those things go towards decreasing the liability that you pose towards the insurance company, and you will be rewarded by having a lower premium to pay. So consider adding or installing an anti-theft device, or when you're going to buy a new vehicle, check out what sort of security features are on the vehicle, and then what various security features and safety features your insurance company will actually decrease your premium for. Just things to think about when you're moving forward. Number 6, and this one should go without saying, but drive safer, drive slower. If you have a bunch of speeding tickets, if you're in a bunch of at-fault accidents, all these things are things that are going to make you much more of a liability and a risk for the insurance company, and they're going to charge you for it. The riskier you are, the more you're going to have to pay. So drive slower, be more of a defensive driver, and make sure that you're doing everything you can to get from destination A to B safely. And the byproduct of being a safe and a good driver is that you're less of an insurance risk, and your premiums are going to go down for it. And another thing in the same vein to look into is see if your insurance company offers any sort of app or tracker that you can put in your vehicle that is going to measure your driving habits. My wife and I use an app through our auto insurance, and it tracks how fast are we driving, are we using our phone while we're driving, do we have a lot of sharp accelerations and quick stops, so we're not really paying attention, we're having to slam on the brakes all the time, and then it measures all that together, and it gives us a discount for being good drivers. Now our discount comes out on average between 20 and 30%, and that's something that's worth it to us to be able to sacrifice some of our privacy by giving some more information about our habits to our auto insurance company. Now, I understand privacy is a really important thing to a lot of people, but in this situation, it's just going to come down to what do you value more, having a lower premium or having more of your privacy. Number 7 on this list is just ask. Ask your insurance company what sort of discounts they offer, and have an insurance agent go through all the different discounts and see if you qualify for them. Whether it's a multi-car coverage discount, whether it is a length of membership with that specific insurance company and getting a discount for that. Good driver discounts. If you have a young child or a teenager that's driving, do they offer good student discounts? Ask for anything and everything, because the worst that they can say is just no. There are a lot of various small discounts out there that can really add up over time, but you're never going to get them if you don't ask in the first place. And finally, number 8 on this list is improve your credit score. Now I know, what the heck does your credit score have to do with you as a driver? But the reality of it is that there are a lot of car insurance companies that will look at your credit score and use that to help measure the risk and in turn how much you pay as a premium for your car insurance. The higher your credit score, the lower your premium. The lower your credit score, the higher your premium. Now, whether or not this makes sense, and I don't really think it does, or that it's necessarily fair, but that's how it is. So you want to make sure you have the highest credit score possible, so that way you're paying the lowest in premiums. Now, if you're trying to figure out ways that you can actually increase your credit score or how it just works, check out this video here. Now, I want to thank you for watching with me today, and please remember, from your first penny to your first million, we're here to help.